downside target for Bitcoin is 62,000 by the end of March. But
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Tom Lee talks about how bearish analysts often sound smart but tend to be wrong. He dives into crypto's future, market trends, and what to watch next. Let's see what he has to say.
the best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but, Bitcoin was $1,000, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Yeah, you do a lot of correlation work, and this is purely anecdotal on my part. It seems very correlated to the NASDAQ 100 right now. Is that fair to say?
Yeah, it makes sense. It's a risk on asset.
Yeah. Let's just kind of take some stock of the whole conversation a little bit, because you've been very bullish for a while, and you've been right. Does 2 months cause you, we're kind of basically, let's say the S&P is unchanged, the NASDAQ's down a few percent, we're 2 months into the year, there's a lot of uncertainty about, we talked about immigration, tax, tariff, geopolitics, the list goes on and on. Things are likely to cool out a little bit at some point, right? On that sort of front, we get some of that uncertainty out of the way. How are you thinking, just if you want to put it in a nutshell, the economy this year? It sounds like you think rates should go lower. You think inflation is probably not going up much higher. And then generally, how are you thinking about the stock market?
I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning. But investors don't want to become too bearish, because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and that's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week.
Bitcoin's surge in active addresses is catching the attention of analysts, signaling what could be a crucial turning point in the market. After a recent correction that rattled investor confidence, on-chain data now shows an increase in network activity, often a key indicator of major price movements. Historically, spikes in active addresses have coincided with both market tops and bottoms, as panic sellers exit while opportunistic buyers step in. This pattern suggests that Bitcoin may be approaching a significant threshold, one that could lead to a price rebound. The number of active Bitcoin addresses recently climbed above 912,300, a level last seen in December 2024 when BTC traded near $105,000. This increase in participation suggests that traders and investors are re-engaging with the market, a dynamic that has often marked critical moments of transition. Some analysts interpret this surge as a capitulation moment, where weak hands exit, paving the way for stronger market participants to take control. If history repeats, This trend could mark the bottom of the recent correction and set the stage for a potential recovery. To confirm a market turnaround, Bitcoin must maintain key price levels. Analysts highlight $80,500 as a critical support zone, with any sustained movement below this level posing risks of further downside. However, indicators such as the MVRV Z-score suggest Bitcoin is entering oversold territory, a historical signal that has often preceded price rebounds. If these trends hold, Bitcoin may be nearing a prime buying opportunity for those watching closely.
I'm not that optimistic about the job picture for the near term, so maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy.
Do you think we're going to get a 10% pullback in the S&P this year? Because we did have one July highs to the August lows, and things kind of accelerated into that August low, and it felt a little panicky. And again, since then, we haven't had too much panic. I think that move in December after the Fed meeting, that felt really bad. But we were not making, it didn't take long to make new highs.
Well, I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. Because it felt like either the Fed made a policy error or the Fed turned hawkish. Right. But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now, not the source of a drawdown.
Okay, so flesh wound, how much upside do you think if we get a lot of those headwinds kind of out of the way, a lot of those uncertainties we just talked about? Let's say we get the base case on that kind of pro-growth agenda that a lot of folks are excited about.
Let me be clear why I don't think it's 10%. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in. That's why I don't think
But it probably takes longer than I expected, because I think we keep throwing these threats out, but we don't actually put any requests for concessions out, right? There really aren't that many right now. I mean, it just seems like it's a bit of a tit for tat, and I think the other side is just kind of sitting there and they're taking the volleys right now because they don't really know what they want.
I'm not an administrator, so I don't know what kind of back channel talk there is. I'm sure there is, so I don't.
Right.
I don't have an answer.
Well, listen, I'm probably with you. I expect some sort of deal, the art of the deal, that sort of thing. All right. Well, we covered a lot of ground here, Tom. I really appreciate you coming by. Again, I think this is a really interesting time for the markets. I know it keeps you very busy. I know that you guys have a lot of clients who probably give you guys some very good insights also. And it's always good to get a sense, because I know that you guys have a huge list of retail clients too who read your stuff every day, and so it's always probably interesting to hear what they're thinking.
Yeah,
also.
we have a lot of touch points.
Yeah, you do. Where can everyone find your stuff there, Tom?
They can find us on Twitter at fundstrat, FUNDSTRAT. They can find our research service at fsinsight.com, or they can look at our ETF Granny Shots, which is ticker GRNY.
All right, well, there it is.
Bitcoin's price action has kept traders on edge, with many wondering whether the recent dip is a bear trap, the bottom, or just an oversold bounce. After briefly touching $85,000 on February 28, Bitcoin's momentum stalled, leaving traders uncertain about what's next. Without securing a higher high on the daily close, questions arise about whether the rally has enough strength to continue or if more downside is in store. Data from TRDR.io shows a strong bid at Coinbase when Bitcoin dropped to a 2025 low of $78,300, signaling demand at lower levels. However, what remains to be seen is whether bulls can provide enough sustained buying pressure to maintain the current momentum. For now, the market is struggling to establish a clear direction, making short-term price action unpredictable. According to crypto trader Magus, Bitcoin is likely to enter a range-building phase, fluctuating between $72,000 and $85,000 over the next few weeks. This sideways movement would allow the market to establish support and resistance levels before making a more decisive move. Magus shared a chart on X, highlighting this potential range, suggesting that traders should prepare for a period of consolidation rather than an immediate breakout. Adding to the uncertainty, Trader Horse pointed out that Bitcoin's performance over weekends might be impacted by traders reacting to statements made by former President Trump. With traditional finance, TradFi, markets closed, investors often use Bitcoin as a way to hedge against political and macroeconomic uncertainty before futures markets open on Sunday. If this pattern continues, weekend price swings could become more pronounced, creating additional volatility. Despite the near-term choppiness, seasoned traders see the recent correction as nothing unusual. Bitcoin's 29% drop from its all-time high of $110,000 aligns with past bull market corrections. As crypto trader in turn pointed out, 30% retracements are historically common during Bitcoin uptrends and have often presented strong buying opportunities. If history repeats, this pullback may be another stepping stone before the next leg higher. Bitcoin's price movement remains uncertain, and traders should brace for more volatility. Whether this is a bear trap, a bottom, or just a temporary bounce, one thing is clear: Bitcoin's story is far from over. And do not forget to subscribe to BitcoinZella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.